Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Bangko Sentral Governor Eli Remolona Jr. warns that spending cuts and falling investor confidence after the graft scandal could put this year's growth target out of reach and may force another rate cut. The Organization for Economic Cooperation and Development, or OECD, says that the Philippines' growth goals through 2027 are slipping further away, with structural weaknesses holding back a full recovery. Despite all the political drama, real estate is still one of the bright spots, and analysts say developers who use this moment to reset and raise transparency could come out big winners. Senator Raffy Tulfo reveals that dozens of water districts have filed complaints against Villar's Prime Water. Now, with many now moving to cut ties over worsening service issues. The economy is stalling amid a widening corruption scandal threatening this year's growth target. Cuts in spending and slumping investor confidence are dragging performance. The Bangko Sentral ng Pilipinas says this. Now, BSP Governor Eli Remolona Jr. warns that GDP growth may reach only 4 to 5%, well below the government's 5.5 to 6.5% goal. On whether the slowdown could trigger a rate cut next week, Remolona said, most definitely, but he cautions that any cut is still not guaranteed. The central bank has cut policy rates by 175 basis points since August of 2024, with growth weak and confidence fragile. Analysts say that the odds of more easing this month are rising. A stark reality check for the Philippine economy. The Organization for Economic Cooperation and Development now expects the country to miss its growth targets for the next 3 years as the flood control corruption scandal continues to slow activity. The OECD cuts its 2025 forecast from 5.6 to 4.7%, below the government's 5.5 to 6.5% target. Forecasts for 2026 and 2027 also fall short. 2026 at 5.1%, 2027 at 5.8%. The Philippines still remains a top ASEAN performer, fourth fastest growing in 2025, second in 2026 behind Vietnam, and tied with Vietnam as the region's fastest grower by 2027. Real estate stands strong as a safe haven asset. Santos Knight Frank said that the property market remains resilient despite political instability and recent corruption issues. SKF Chairman and CEO Rick Santos called the climate an opportunity for a reset, urging developers to focus on transparency and on strategic positioning. Luxury property demand stays strong. Lower interest rates are boosting buying and selling, with no major market disruptions expected. Manila ranks 5th globally in Knight Frank's Prime Global Cities Index, posting a 9.1% year-on-year rise in second quarter prime residential prices. A backlash is brewing against prime water. Dozens of local water districts are moving to end agreements over alleged service failures. Senator Raffy Tulfo said that 61 districts are dissatisfied, with more than 50 considering terminating their joint ventures. But only 21 districts have the technical and financial capacity to take over operations. He told the Senate committee even as many push to break free. Prime Water's president insists that the company has done nothing wrong and is working with partners to address concerns. Tulfo also revealed a contractor servicing multiple sites has over 90 million pesos in unpaid billings, questioning why Prime Water, with a 2024 net income of 1.34 billion pesos, hasn't settled them. The Department of Economy, Planning and Development Secretary Arsenio Balisacan has said that education is the foundation of human capital development. In the Philippines at the 2025 Philippine Education Conference, closing the event at the SMX Convention Center, Balisacan highlighted education's role in building the skills, confidence, and resilience Filipinos need to drive national progress. Organized by the Private Education Assistance Committee, the conference themed Changing the Narrative of Philippine Education by Making Reforms Work, focused on education challenges, reform initiatives, and emerging trends and policy dialogue. The Philippine economy is losing momentum with lower growth projections and widening corruption probes weighing on confidence. And for investors, the big question now is where the smart money goes next as markets look for clearer signals. Joining us this morning is Jonathan Rovelas. He's the senior advisor at Reyes Tacandong and Company and a well-respected market analyst. Hi, Jonas. Thanks for being here with us.
Good morning, Maiki. Good morning to your listeners.
Okay, Jonas, let's start with a big picture. Growth is slowing. The OECD has cut forecasts for the next 3 years. Confidence remains fragile. The BSP expects a much slower growth, 4 to 5%, against the initial 5.5 to 6.5 projection for 2025. What does this mean for the direction of the stock market as we head into 2026?
Well, basically, we're currently just more of a sideways or a consolidation at this point in time.
Okay, given the weak sentiment, Jonas, how can investors make money in a market like this?
Well, it's a trading market. We've been trading between the 5,500 and probably tops at 6,000. So they can trade the range, just like what we saw when before we broke the 6,000 level, we were trading between 6,000 to 6,500 level.
Okay, another shock on the accountability front, Jonas. We expected an accountability milestone. We expected people to be jailed by Christmas. But given the resignation of Babe Sing Son from the ICI, how do you see this setback and how might it affect investor confidence as we head into the new year?
Well, basically, I think our baseline was really looking at somebody to get jailed by end of the year. So the key idea is to be able to replace the Babe Sing Song at the fastest times to stay in line. Otherwise, there will be a lot of renewed fears of a potential slowdown of this accountability issue and, the feeling that we're kicking this can down the road.
Yeah, kicking the can down the road. Drilling further into that, if no one goes to jail by Christmas, I mean, when we look at our market, we're down 8 to 11% year to date. But, if you look at the bigger picture, Bloomberg says that over the past decade, we've been the worst performing stock market in the world. I mean, we're near are we even near the bottom? And given this setback, if nobody goes to jail, might we even go down further?
Well, we haven't seen the bottom. I think we need to understand that our fundamentals remain sound. I think the key factor to remember today is that we're having a toothache. So regardless how good the buffet that we're looking at, but when you have a toothache, nothing seems attractive. So until we fix the tooth or we're able to address this accountability issue, the faster we change the person, then definitely we could move on with the accountability.
That's right. You can lead the horse to water, but you can't force it to drink. Jonas, do you think the SEC and the PSE have done all they can at this junction to really lift our market?
I think they've done the best they can. It's just that, I guess, one of the things that they recently rolled out was moving into the personal equity retirement account. So this could be one of those potential projects that could, revive the interest in the market. But again, before we can talk about reviving that, we need to address this accountability issue.
Yeah. Okay. In terms of reviving interest in the market, on that front, there's also the BSP. They've been doing a lot of heavy lifting. Since August of 2024, they've been cutting interest rates. Another rate cut is expected, perhaps 25 basis points this Monday. Why hasn't this exactly boosted stocks, or do you think it already has at this level? We also know that the transmission rates, it takes a while, about 6 months.
Well, basically, I guess part of that is the transmission And eventually, the other effect was really more of the tariff. So that actually created some setback for investors to see what is most likely to happen.
What do you think is most likely to happen at this junction, given where we are now?
Oh, well, basically, I am looking at an opportunity for the Philippines to continue with its infra spending. I am actually trying to look at the private sector to take the slack at the moment till confidence starts coming back.
Okay, confidence is weak. You said it's a trader's market, but how can people do this? Not everybody has that capacity to trade the market. I mean, there are opportunities. If you're looking at it at like 55 to 6,000, you could take a nice chunk out of that. But if you're a long-term investor, what are they to do in this situation?
Okay, so basically, we've gone through certain periods on time that we encounter this type of issue. So we look at big blue chip companies that have looked beyond the crisis. They've expanded during current periods of uncertainty, and they eventually did well.
Jonas, can you identify for us what are the stocks that are undervalued today, not because their business is weak, but only because sentiment is soft?
Oh, well, basically, I guess we can probably already look at all the components in the index, especially the top 10.
Okay, can you give us the top five?
Okay, the top five, basically, you have the C group, the SM Investment Corp, you have SM Prime, BDO, the likes of BPI, Ayala Core, Ayala Land. So these companies are actually at bargain level. It's just that there are still risks ahead that investors aren't um, fully grasp their confidence to be able to lock in long term. So the key word really is accumulate.
Yeah. Okay. As we look at earnings and as we look ahead to 2026, what are companies doing right now? I mean, I hear plans of companies delaying expansion plans, not launching new projects. I hear companies focusing on the mass market segment right now. How will this how will this impact earnings further down the line?
Okay, so this is where I think this separates the boys from the big boys. So those that have well experience in the capital markets are looking at this opportunity to build their war chest, meaning their funding to be able to continue their expansion plans, and they're not set back by this situation. So again, these could be property companies that follow the Kevin Costner strategy: build and they will come. And then, of course, for some, they would probably take a step back and probably reassess their situation. So this could be the mid caps. But again, one of the things that we need to focus on is those that are pressing on, and the risks of earnings downgrade could be there. But if infra spending starts to pick up in the next 6 months, this could actually be may not materialize.
Okay, Jonas, thank you so much for your time this morning. Jonas Ravella, Senior Advisor at Reyes Tacandong and Company.
Thank you for having me.
We're going to be taking a quick break. Please stay with us as we dive deep into the numbers and the stories that matter most to your bottom line. Welcome back. Let's see how U.S. and European markets moved overnight, setting the tone for Asian trading this morning. U.S. stocks rose Wednesday, supported by new economic data that boosted expectations of a Fed rate cut next week. A record 43-day government shutdown had delayed key reports, but with a backlog cleared, investors are getting a clearer read on the economy. Now, in Europe, markets ended mixed. The UK's FTSE 100 and Germany's DAX slipped as financial stocks struggled, while mining and energy shares edged higher ahead of the Fed's decision. Taking a look at the Asian markets, right now the Nikkei 225 is trading to the upside, well entrenched in positive territory, up by 1.4% in early trade. Hong Kong's Hang Seng Index going the other way, down by 0.2%. Shanghai's Composite lower by 0.4%, and Singapore's Straits Times Index flat with a slight downward bias. Taking a look at our market as of 10:19, the main gauge is trading flat. Flat, but to the upside, up by less than 0.1% to 59.09. All shares index flat as well, with a very slight upward bias, pretty much flat. Taking a look at these sub-indices, we're looking at a mixed picture here. The industrial, holding firms, services, and mining and oil counters are trading to the upside, while the financials and property counters are limiting the market's advance. Volume is at 139 million shares, valued at 1.77 billion pesos. Market breadth almost neck and neck, so it could go either way. We've got 62 advancers, 60 decliners, and 62 stocks unchanged. Just goes to show how how uncertain things are in the market, and people don't know which way to go. Now, on the currency front, the peso opened at 59.95 to the greenback, down from its previous close of 58.92. In other news, S&P Global Ratings reaffirms PLDT's BBB credit rating with a stable outlook, a sign that one of the country's biggest telcos remains financially solid at a time when investor confidence in the Philippines is being closely watched. S&P said that PLDT's capital spending has stayed within budget for 3 straight years, with more cuts planned next year, helping improve the company's cash flow. In the third quarter, PLDT posted net income of 6.9 billion pesos, down 28% from last year, while revenue is inched up to 53.7 billion pesos. The ratings agency expects steady growth in fixed line services, but notes that competition could pressure future performance. For the country, a stable rating on a major telco helps support broader market sentiment, especially as investors track corporate health amid lower growth projections and the ongoing corruption probes. Now, in other news, a big shakeup in local television. TV5 is ending its content partnership with ABS-CBN and dropping Batang Quiapo, ASAP, and other major shows over a near 1 billion peso payment dispute. The two networks are parting ways after TV5 accused ABS-CBN of using a ploy to delay revenue remittances, a rift that highlights the pressures facing broadcasters in a tough, rapidly shifting media market. TV5 has terminated the agreement effective January 2, 2026, and says it will pursue legal remedies to recover the unpaid funds, while ABS-CBN has yet to issue its full response. Now, as we close out the year, it's easy to get lost in the headlines, the challenges, the corruption probes, and the market volatility. But through all of that, one question matters most: what keeps us rooted in the Philippines, and what makes this country worth believing in? So I asked some of the country's top business leaders one simple question: what do you love about the Philippines? And throughout December on Business 360, we're sharing their answers. And here's today's. JG Summit Holdings Incorporated President and CEO Lance Gokongwei, one of the most respected leaders in Philippine business, shares what he loves most about his country. Let's listen in.
I have high hopes in our youth. Every time I have a chance to talk to the younger employees in our organization and interact with the scholars of our Gokongwei Brothers Foundation, I always come out very energized. Their idealism, their genuine desire to contribute to the advancement of our country is so inspiring. Whether by paying it forward so that others may benefit from their gift of quality education, or by giving their best in their work, convinced that what they are doing will eventually help make the lives of all our countrymen better. Or by simply being good citizens, sharing their talent, time, and resources for those facing challenges. Every day, they are helping build our nation in their own personal capacity and in their own humble way. Because just like all of us, they love the Philippines and they continue to have faith in our country. I am truly convinced that the Filipino youth will bring our country to greater heights.
Next is Century Pacific Food Incorporated Executive Chairman Christopher Paul, one of the country's most respected business leaders and a champion of homegrown industry, sharing why he loves the Philippines. Let's listen in.
What I really love about the Philippines is our strong sense of family and community. That bayanihan spirit that you feel everywhere. I'm always touched by the stories of Filipinos who sacrifice for the people they love. Overseas workers who leave their families for months or years to give their family a better life. Professionals who come home from great jobs to care for their aging parents. Or those working multiple jobs just to send a sibling to school. And it doesn't stop at family. When there's a calamity or a cause like education or food security, people and even companies come together to help. We even have a term for it, kapwa, a deep sense of interconnectedness and care for each other. In the Philippines, we believe we are our brother's keepers. That's what makes us such a warm, hopeful, and resilient people. And when you see that spirit multiplied across millions of families and extended to the broader community, it drives our dynamic consumer economy. As a business group, we are grateful to call the Philippines our home. We are putting our investments to work here, at home, because we believe we can do well while doing good. By supporting this shared sense of community, we are creating opportunity, uplifting lives, and making a better Philippines.
Next, we hear from Foodie Global founder and CEO Enrico D., a homegrown entrepreneur who has built some of the country's most beloved restaurant brands. He says he has always loved the Philippines, a nation that has weathered every crisis and still finds a way to rise. Let's listen in.
I love my country, the Philippines, without a doubt. In my 60 years of existence, I've gone through all the major crises the country have faced, and we've proven to have overcome it and bounce back thereafter. In the coming years, we will continue to do so. We would like to pass on to the next generation our rich tradition of strong family bonds, hospitality, and resiliency. We would encourage our fellow countrymen to love their country, as we need this for us to grow to greater heights. Thank you.
Federal Express, or FedEx, says that this year's holiday e-commerce boom will give a boost to Philippine and Asia-Pacific small and medium enterprises as festive season sales and online shopping events drive cross-border orders. A FedEx survey shows most Asia-Pacific and European businesses expect strong holiday sales. Consumers still want faster, cheaper shipping, with delays and high costs remaining the biggest challenges. FedEx is expanding digital tools, last-mile solutions, and cost-effective options like International Connect Plus to help merchants deliver quicker and more reliably this season. In other news, a major legal battle is now hitting the global food industry as the city of San Francisco files a lawsuit against Kraft, Mondelez, Coca-Cola, and other giants making ultra-processed foods, accusing them of knowingly marketing addictive and harmful products. City Attorney David Chu says these companies use tactics reminiscent of the tobacco industry and drive rising rates of obesity, diabetes, and heart disease, especially in minority and low-income communities. The case raises global questions about food safety, corporate accountability, and the future of ultra-processed products, an industry worth hundreds of billions of dollars worldwide. San Francisco seeks restitution, civil penalties, and a court order to stop deceptive marketing and force changes in how these multinational companies sell their products. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on DNC, the Bilyonaryo News Channel.